Hello, everyone. I hope you had a wonderful month of April. There was a lot of volatility in the market this month. When we look at the numbers for the month to date return for the major indexes, the Dow Jones was down 3.17%, just over 3% for the month. The NASDAQ was positive 0.085%, so almost 1% positive for the month. And the S&P 500 was down 0.76%, so almost down 1% for the month. But man, it didn't feel like that is the way that this month would turn out, especially how it started. So the word of the month was definitely, or I guess two words of the month, tariffs and volatility. When we look at the tariff timeline for this month, early in the month, President Trump announced his what he referred to as Liberation Day tariffs. They were much more broad sweeping, much more aggressive than anyone was expecting. The following days after that, the market really sold off and sold off aggressively. About a week after the tariffs were announced, President Trump did come out and announce the 90-day pause on those very broad sweeping, very aggressive tariffs, and the market rallied and rallied very aggressively. On that day that announcement was made, the S&P was up almost 10% just in that one day, and the NASDAQ was up over 12% just in that one single day. Since then, we've seen escalation with China, talk of de-escalation with China, talk saying that what we're doing with China when it comes to a trade war perspective is unsustainable. We agree with that wholeheartedly. Would love to see us de-escalate our situation with China. What some of that more positive talk has done in the second half of this month is it has been more positive for the market. The market has responded in a more positive way. The administration has said that over 100 countries have reached out hoping to make trade deals or improve the trade relations between the United States, which is positive news. So the market has responded in kind, hoping that those deals will get pushed across the finish line. As of the beginning of May, we have not seen any of them officially get pushed across the finish line, but we're hopeful, and we hope that we will see some of those deals start to get inked. That will give us as investors some confidence, give the markets confidence, and give these businesses some more clarity on how to plan for their futures as well. When we look at the economic data that was released this month, the CPI number, or the inflation reading, was at 2.4%, which is a great number. Continued to come down a little bit further, closer to the Fed's 2% target. That PCE reading, the Fed's favorite measure of inflation, was at 2.3%. Once again, getting closer to that 2% target. Not there completely. This is backward looking data, so tariffs could throw a wrench into that as well, but positive data nonetheless, at least for this month. When we look at the unemployment number, still at 4.2%, still historically a very low and very reasonable number for the unemployment number. Other numbers, the economic data that came out this month, consumer confidence was lower, the job openings number was lower. That tells us that the economy is slowing. Us as consumers are getting more cautious when it comes to what may unfold with the tariffs and how that may impact us as we live our daily life when it comes to a price of goods and price of how much things are going to cost for us. At the end of the month of April, the first quarter GDP number was released, and the first quarter GDP of the U.S. was negative 0.3%. So it did slow and was in contraction, but that primarily came from imports. And so when we look at the GDP number, they take the net exports, or how much we export versus how much we import. And a lot of companies were trying to import a lot of goods to front run what could potentially happen with the tariffs. So we feel this number could be a little skewed. Think it definitely, the economy has been slowing. We've been saying that the economy has been slowing, but just because this first quarter GDP number was negative, think it could be primarily from that import number and those companies trying to get a lot more goods into the U.S. before some of this tariff implementation started. So what are we looking for as we continue on in this uncertain and in this very volatile market? So what we're looking is we're continuing to see how the data unfolds. How will these tariffs impact those inflation numbers, the consumer confidence numbers, jobs numbers, the wage numbers? All those things, we'll continue to monitor that and see how those trends continue to evolve as we learn more about how and what these tariffs are going to look like. Also, when it comes to tariffs, will we get to see some of these fresh trade deals get pushed across the finish line? That would be very encouraging, very positive for the market to see, and very important to show us some clarity on what tariffs will look like. It's positive news to see that there are 100+ countries that have reached out, but we need to see some of those get pushed across the finish line to really give us some confidence there. And then we're also continuing to watch earnings and guidance. And so we're in the middle of earnings season. As we get at the end of April and beginning of May, we're right in the thick of earnings season. We want to see what these companies are, not only their earnings from the last quarter, but also their guidance for the rest of the year. And so ultimately, stock price is going to follow earnings. So we're being extremely mindful of looking at companies that are continuing to perform well even in this challenging environment. So that's what we're continuing to watch as we look at the market, the economy as a whole. We would love to see some of these deals, like I said, get pushed across the finish line. That would give these companies some clarity on how to plan for their future, as well as us as investors to give the market some confidence and know how to go from here. So hope you all have a wonderful month of May. Look forward to talking to you soon.